You want to do another company?
Mm-hmm.
Let's do a company that no one's really heard about. It's not been in the news lately, and that's Paramount Skydance. You want to talk about them?
Let's look at Paramount.
Okay. Their new symbol is a PSKY, Paramount Skydance. They're in the entertainment industry. There's no shares on the float or institutional ownership here yet. They do have a PE ratio, which they did not have before, but it's 398 versus not material for the industry. Price of sales looks good, 0.3 versus 2.1. Price to book value, 1.1 versus 3.3. Price to cash flow is 10.5 versus not material for the industry. Now, they have no earnings over the last year. Their sales are down 85.9%. The industry is up 5%. They do, I guess they're still paying a dividend of 1.7%. It shows that your free cash flow payout for that dividend is only 27%. We see on the balance sheet, current ratio 1.3 versus 1.2. That is good. Debt to equity, I'll say right now, is 1.2 versus 2.2. Net profit margin is a minus 0.3. Industry a positive 7.1. We do see return on equity is flat, nothing there. Free cash flow, $222 million versus $6 billion for the industry. And there's a lot of things to talk about here. So kind of in the basic fundamentals, we'll have more of a conversation when you're ready.
Yeah, so current price here for PSKY. I gave you the ticker symbol, PSKY. Name of the company, Paramount Skydance, $11.99. And this stock, frankly, has been all over the place. The 52-week low here, $9.95. The high, $20.86. You go forward for this business, you out to December 2027, I'd say the valuation doesn't look bad. Estimated earnings per share here, 98 cents, gives you a target sell of $16.27. It looks like earnings are expected to climb quite rapidly as well. This year, looking for earnings growth of 48%, next year, 26%. But the big thing is the analyst range is quite large. The low estimate of 16 analysts, 46 cents, and the high at $1.60.
Wow. And this company has a lot going on. And again, what's going on is that they're buying Warner Brothers Discovery. It's still Warner Brothers Discovery. Mm-hmm. And that's why these numbers for the debt, they look good now. But this is where when you're looking at investing in business, you have to know what's going on going forward. I mean, the debt they're taking on is enormous. I believe their debt, their leverage is going to be like 4.2 or something. It's huge.
To the EBITDA, correct. Yeah. And if you look at, Paramount Skydance has a market cap of about $13.24 billion. But when they're acquiring Warner Brothers Discovery, they're going to be acquiring them at $31 a share. I believe the market cap at that rate will be over $70 billion for Warner Brothers. But the thing is, you have to add in the debt that Warner Brothers have. So it's something called enterprise value. We look at the market cap of the stock plus the debt. You're talking about a $110 billion acquisition that they're taking on to buy Warner Brothers. Again, with Paramount only having a market cap of $13 billion, they're going to have to take on debt outside of the debt that Warner Brothers has. So, taking on a $110 billion acquisition, are you going to be taking on $100 billion in debt? How much? I think I was reading here shortly, actually, that they'll have like $80 billion of debt after the transaction closes.
And they say, well, it's backed by Larry Ellison. He's a multi-billionaire. He can back it up. But he's also a smart businessman. If he sees this going down, no, there's no way this is going to turn around. He's not going to chase good money after bad money. Yeah. So he'd say, you know what, sorry, we'll just let it go. We'll take a tax write-off. And the shareholders will lose all the money. And they could turn it around. It's possible. Yeah. I know I saw him in an interview, which I thought was kind of flippant when they said, well, for CBS, the NFL contract comes up, I think, in a few years. And they're talking about a 50% increase. And David Ellison just kind of like, yeah, we can do it.
He said, I can't really talk about it, but we planned for it. Essentially is kind of what he said. And
he kind of flipped
I think he'll spend whatever. I don't know how disciplined he is when it comes to capital. And, the problem is he was kind of doing his own little studio essentially with Skydance for so many years. Now he burst on the scene. We don't know really how capable he is as a CEO. All we know is now he, brought in new writers for billions of dollars. He, brought in the UFC for billions of dollars. I'm talking about the NFL, the Warner Brothers situation. He is spending a lot of money, and their debt just got downgraded to junk after the announcement of Warner Brothers. This, if it works out, it'll be a good investment most likely. I think you'll make a good amount of money off of it. But the risk that is now embedded in this stock is very high with the amount that they're spending. Things have to work out with this flip to streaming. And I'll tell you, they have great content, and that's why the potential is there. but it is a huge risk with all the debt.
And what they could do, and again, we were talking about with Harrison about the billionaires with the taxes. I mean, what could happen is that Larry Ellison could say, yeah, I'll loan you the money. And that way, if it goes broke, I can write it off.
Yeah.
But to give them the money, I don't think that's going to happen.
He's not going to give them the money.
Give them the money, yeah. So, and that's what people think, oh, it's backed by Larry Ellison. He's got billions. Like, but he's not a stupid businessman. He's not going to do stupid things. And I just, again, David Ellison just keeps spending and spending and spending and building debt and building debt. And he talks about the cash flow. Well, yeah.
I mean, the cash flow better be good. If you have $80 billion in debt, you got to have cash flow to hopefully pay that down, but you got to chunk that down very quickly. And I don't know. I mean, we know their cash flow machine right now is still the linear cables, but that is subsiding. And I just don't know how quickly they can get the cash flow turned on. I mean, from a personal standpoint, I'm a little upset because I like the Paramount Plus because it's like $7-8 a month. I forget how much it is. T-Mobile pays it on my behalf essentially. But now they're supposedly going to be merging, the HBO Max and Paramount Plus, and it's like that's not going to be $8 a month. They're going to want probably $20-25 a month.
And I think this was a great deal at a terrible price because it made a lot of sense for the deal, get all the subscribers and so forth, but they way overpaid. They should have walked away from the table, but we'll see. And I'm going to say probably the next 2-3 years, we'll see what happens because it could. I'm not convinced it'll be around. I think it'll file bankruptcy, recapitalize, and something else will come out from it.
Yeah, I mean, we'll see 2 to 3 years, as you said.
Yeah.